Hey, what's up, everybody? I am kicking back here at my office, just thinking of the stimulus check, tax returns, because we're doing our taxes. A lot of us are doing our taxes right now, and we all know that we're getting a stimulus and stuff, depending on your qualifications, I guess. And but if you're getting that stimulus check and you have a tax return coming, it's something that we, kind of want to take a look at if you're looking at buying a home. We're going to show you a little bit about, things that you might be able to do with that money to really, accomplish that goal of home ownership. So I'm just kind of browsing, kind of checking things out. Just want to see if my numbers are looking good and share with you everything that I'm researching right now. Okay, so if we take a look, I'm just going to Google this, guys. Average tax return. There's going to be information on the average tax return and the tax refund amount by state according to Yahoo Finance. We're going to go off that number. Let's see if I can find New Mexico. New Mexico, the average return is $2,672 is the average tax return. Okay, so let's take that and let's add the $1,400 stimulus if you're getting a $1,400 check. That's just for one person, right? You add your tax return of $2,672 plus the $1,400, you got $4,072. A lot of people ask me what the closing costs are on a home. And we can talk a little bit about that here in just a second, see how that $4,000 works. Now, there's programs here in New Mexico that will allow you to purchase your first home on a first-time homebuyer program. And these programs allow you upwards of $8,000 of incentives. Now let's look that up. New Mexico first-time homebuyer programs. Now most of these are FHA loans, okay, that are coupled with a first-time homebuyer program here. And MFA is the Mortgage Finance Authority. Now, their organization is housingnm.org, okay? You could pull up the research about them, what they do, what their mission is, pretty easily online. But you can also take a look at these programs to see how much they're going to allow you towards your down payment and your closing costs. Okay, there's the first-time homebuyer grants and programs in New Mexico. Now we have lenders that we can help you get in contact with to get you qualified. Once you're qualified, then you're out shopping for a house. We'll get your budgets, all that type of stuff. But I'm just doing the research. You have a $1,400 stimulus check. I would really think about buying real estate versus buying maybe another vehicle. If you have several vehicles, a vehicle might not be the best investment. Buying maybe even video games, some of these, consoles are pretty expensive. And for that money, you can actually put it towards purchasing a house. And purchase something that you might want to, lay down some roots, be able to say it's your home, have a yard, that type of stuff, right? So let's look at the housingnm.org, okay? And let's look at just the mortgage programs that they have available. There's the First Home Program, First Down Program, and the Next Home Program. So, there's just pretty basic fact sheets on these that you can get online. just to understand what this down payment assistance might be. Now, let's take a look at what they're talking about. First Home is MFA's first mortgage loan program that's available to first-time New Mexico homebuyers who have low to moderate incomes. First Home can be used in conjunction with MFA's down payment assistance second mortgage loan program, First Down. First-time homebuyers are buyers who have not owned and occupied a home as their primary residence within 3 years. So if you haven't owned a property in 3 years, you're a first-time homebuyer. Say you owned a property 4 years ago, but sold it, and you don't own now. Well, you're considered a first-time homebuyer according to these programs. Minimum credit score, 620. I'm just going off just some basic information on this. Borrowers must contribute at least $500 of their own funds. Okay? Now, that's $500 of your own money. You got a tax return of $2672. You have a stimulus check of $1,400, saying you only got one stimulus check. If you have a two-person household, 3, 4, etc., that might be more. I don't know. But let's just say one person, $1,400. You get a tax return of $2672. You have $4,072 in tax return. And I'm going to put some of these numbers on the screen and stuff. But $4,072, you need $500 of your own money for this program, and that's typically comes in your earnest money, right? You put $500 earnest money. If you want to know what earnest money is, maybe I'll do a video here soon on that. I just want to educate you guys on some basics, on just the numbers, right? So $4,000 you minus $500 for your requirement. Okay, now you have $3,572 left over. Now you might have closing costs to pay, depending on how much of a house you purchase. Now I believe some of these programs are allotting $8,000 towards your purchase of your home. That's going towards down payment and some closing costs. Now these things change all the time. I've been in the business for quite some time, and I'll tell you, numbers change. It's up to $8,000 to assist with down payment and closing costs. This is the First Down flyer off of housingnm.org. Okay, and it's going to show you some income limits. I could share all this with you guys if you want to sit down and actually discuss the entire home buying process. I'm more than happy to help you out. Just call me, ask questions. That's what I do, okay? So, all right. You had $2672, $1,400 stimulus, $4,072 minus $500. You had $3,572. You have up to $8,000 down payment assistance. Okay? All right. You can see already you have, as a first-time home buyer, you have $11,572 at your disposal, $3,572 in your pocket, $8,000 coming from housingnewmexico.org, MFA. You know, this is a pretty big thing for you guys. And I want to share this with you guys because a lot of people don't know that you can purchase a property. Now, we have lenders that can help you out. We have other programs that are out there. This is just going off one program that I know about. We have several different programs out there. And you may have your own down payment. The $4,000 may just help you pay some closing costs. You might not need to borrow the $8,000, but it's available. It's there. So you have $11,572. Okay, let's say you bought a $200,000 home. Okay, all right. FHA down payment requirement is 3.5%. Okay, so you take 3.5% of $200,000. Should be $7,000. Just going to double check my math so you guys are on the same page with me. 200,000 times 0.35%, you have $7,000. That's your down payment requirement. You have $8,000 of MFA monies to go towards that down payment. And you finance it within the grant program that they are offering. Now, majority of the time it has to be paid back. Depending on your situation and what grants that are out there, you usually have to pay them back. But it's not money out of your pocket right now. You can acquire a property with very little money out of your pocket. So that's where this comes in. The $8,000 comes in, pays that down payment of $7,000. You have up to $8,000. You still have $1,000 left of the grant money because you just put $7,000 of it towards your down payment. You put $500 of your own money. So, actually, if you do the numbers that way, because you did put $500 of your own money in there already, you'd actually need to come up with $6,500 because you already put $500. So it's $7,000 minus $500 earnest money, or money that you already put up, and we took that out earlier. So it's $6,500. That's baby Gerad in the background. Chilling out, learning. Probably watching some tunes or something. Chilling with mom, learning some real estate stuff. He's gonna know all about this. So, all right. So your down payment $7,000. You put $500 towards it. You needed to come up with $6,500 for down payment. So you had $8,000 allotted. Now these are just rough numbers, guys, but this gives you an idea that you about have $1,500 left over of the MFA funds. Plus you have $3,572 on you, right? So you have $3,572 plus the $1,500 that you may still have left over from MFA. You have $5,072 left over, and that could pay your closing costs. Okay, $1,500 from MFA will go on the money that you borrow for them, so that can cover certain items like origination costs from the lender, recording fees, title fees, that type of stuff. If you want to know all the closing costs, we can help you out. But you're going to have inspections too. You might get the home inspected. Home inspection, $350. Termite, dry rot, $100. Let's say it has a fireplace and you want to get that checked out. Another $100 for the fireplace. Dry rot. Termite. Full home inspection was the $350. These are real figures, guys. I mean, these are estimates, but these are numbers that I see. For inspections, you're looking at $550. There's a bunch of different inspections you can get, depending on age of home, lead-based paint, radon. You could get different types of tests. If it has a pool, you get pool inspection. It depends on the house. But these are roughly some numbers that you have about $550 in a house that has a fireplace. You want to get dry rot, termite, full home inspection, which covers windows and heating and roof and electrical, plumbing, that type of stuff. They're going to check it all. And if they see that it needs a little more, they're going to call out a licensed HVAC specialist or a licensed roofer, to come check it out. And we get that done for you guys. But that's $550 for inspections. All right? You have some other closing costs. But now you had $5,000, $5,072 minus the $550 for inspections. You have $4,522 left, okay? Now we could run the numbers for you. We have $4,500 towards other closing costs. That should be plenty to get into a house. Plus you put your down payment, you started paying for inspections. Let's look at those numbers a little bit. Okay. Average closing cost, let's just go to Google real quick. Average closing costs in New Mexico. Bank rate average closing costs in New Mexico are around $2,051. Now, you're going to get certain types of credits, tax credits, back and forth from the seller. Seller may pay some things. So I'm just going off some average numbers that we find online just to give you a basis of how this works. Every transaction is different. Every scenario is different. Price ranges are different. The types of inspections you get are different. The types of lenders you use are different. And because we've done this for so long, we can help you through that whole process. We've done it hundreds of times, and we want to share that experience with you. We want to bring our services to you and help you understand the entire process. But you have $4,522. I'm adding on top of the $2,051 of the average closing costs, $550 of inspections. So you've already took that out of inspections. So I'm actually saying that there's about $3,000 worth of inspections or closing costs, excuse me. But it could be a little bit more depending on price. Even if it was $3,500 or $4,000 or even $4,500, you might be able to buy interest rate down. I don't know. You talk to a lender, see how much that costs to buy your interest rate down. But for the money, that just is coming from the stimulus and the first-time home buyer program. That's how you can couple it together to purchase a home. Now we could help you in so many different ways understand the process from start to finish. So come to iSpeakRealty.com. You can set up an account there, start looking at properties, ask us questions, chat with our professionals, and get into a home. That's really what it's all about, guys. Here at iSpeak Realty, that's what we do. So let's take that out of the $4,522 that you had, and let's just say your average closing cost was $2,051. You have $2,471 should be in your pocket. That's your stimulus money that you actually had left over. You leveraged the MFA program to give you the $8,000, up to $8,000, depending on scenario. Again, these are just numbers that I'm talking about on the fly because I just wanted to bring this to you, because this is what I look at all day, every day, just running numbers. You know, if you find that I'm flawed somewhere, let me know. We always like to talk about it. But overall, the numbers make sense. The numbers are clear. You have $4,072 on hand. You couple it with the $8,000, you have like 12 G's. You know, you take your earnest money out, you end up with 11.5. Guys, that's how you purchase real estate. Acquire your first property. In the long term, real estate goes up. Even in the normal downturns that we may or may not have. And everybody talks about, yes, you always have the downturns. When are they going to be? I don't know. I don't have a magic, ball to tell us exactly where it's headed, but we try to look at the numbers to see, when it may fall out, that type of stuff. But I've owned real estate personally for several years. I look at long term. I try to look at just growing some roots in town because I'm not planning on moving anywhere. Purchasing a home isn't for everybody. Depends on where you're at in your life. We talk about that. So that's where it's at, guys. I just wanted to share those numbers with you all, kind of share how you can use your tax return and your stimulus money to purchase a house. It's pretty much that simple. We can show you the program from start to finish. We can sit down, do a 45-minute buyer consultation, get you in contact with a local lender, get an application in. Typically takes 24, 48 hours to get qualified. Get your paperwork to the bank so they know that they feel comfortable writing you a pre-qual letter. Start looking at homes, move forward, do all the paperwork, all that type of stuff. Get all of the due diligence period out of the way, and let's help you get into a home. I can share all that with you guys. I'm really excited, flailing my arms around, but that's how you can make it happen. Don't go out and buy a rolling mortgage. And if you know what I'm talking about, it's going out and just buying a very expensive vehicle that you can't live in, that you're spending $700, maybe $700 on a payment. Let's talk about that real quick. Now that we're going that route, let's talk about what the payment would be on $200,000. Let's just Google mortgage calculator. And let's just get a mortgage calculator just right up front. 200, it comes up on the first page of Google. You just Google mortgage calculator, you can get one real quick. So $200,000, 30-year fixed, interest rate 3.532. State of New Mexico, credit score 719. Let's go ahead and go 620 to 639. Your monthly payment, your interest rate, say it jumped up because your credit score is a little lower. Even if your credit score was 620, your interest rate might be 4.1. If you go higher credit score, then you're going to get a better rate, right? But look at your payment overall. Even at the lower of the credit scores, your payment on a $200,000 home, principal and interest, is $970. $970. You go out and buy a vehicle and you're spending $600 a month on something that's going to depreciate typically. I don't know. There's just certain things that make sense to me, certain things that don't. If you're investing in yourself, and real estate's a way to go. You can purchase a car smart. You can purchase a used vehicle later on down the road. You can use your vehicle until the wheels fall off and get you to point A to point B. It's called bootstrapping. Put your bootstraps on and, start saving money and just use the things that you have right now and save money to get another vehicle. Pay cash for it if you can. But try not to use, $700 of money on a rolling mortgage. That might not be smart. So, it just depends on what you want to do. You guys, obviously, you can do whatever you want. We do live in America, right? So you go buy your vehicle, do that. But if you're looking at buying a house, $970, principal and interest, you add taxes on top of that. Let's just say $2,400 a year in taxes. So you add $200 of taxes on top of that. Your mortgage on a $200,000 with principal, interest, and taxes, $1,170. Now I have some really good insurance agents that can insure your property and maybe even get it really low to where it's $500-600 a year. If it's say it's $100 a month, even at the higher end, $100 a month, that's $1,200 a year for insurance. So now you're insured your home, you're paying your taxes, you have your principal and interest that you're paying every month, and your payment's $1,270 estimated. Again, bear with me, I'm just running regular numbers. It depends on your scenario, where your credit is, where your situation is, and that's why it's a case-by-case scenario. That's why we want you guys to call in, reach out to us, and we can go over all these numbers. And if it's not ready, the right time, we'll try to set you up for success. That's what it's all about. $1,270 is your payment with principal, interest, taxes, and an insurance. Estimated, just going off some basic numbers. On the higher end, it could be way lower than this. I don't know, but I'm running higher end numbers. That's kind of, why I'm just running some basic figures and disclaiming that, because you can change the mortgage calculator and all that, but a lender, you do an application with a lender, they're gonna tell you exactly what to do. So, all right, guys, I hope that helps you out. $1,270 for a $200,000 house estimated. You might be paying rent that's $1,300 right now, $1,500 right now, and you could get into your own home. You can use the stimulus money, you can use your tax return, you can leverage first-time home buyer programs, and I want to help you out with that. So reach out to us. You can comment below, we'll get back to you. You can reach me on my cell phone, we'll throw that number out there. Our website, iSpeakRealty.com. Come by, look at properties online, and let's get you set up to where you can go take a look at some of these properties right now. So if you're looking to leverage that and you want to learn some more, I hope that helped you out. It's quite a bit of information, but that's what we do, and we're here to help you out. Have a good day, guys. Bye.